So the Indian capital market is definitely going to grow.
Stock market performance and investment returns.
For anyone to beat inflation, Indian stock market is a very good example where by investing in that,
Do you believe that the stock market is the best way to build wealth for the future?
and it's going to achieve a lot of milestones. There are three factors to it. So for someone to stay invested, it really requires discipline as well as financial planning to ensure that they reap the maximum benefits out of compounding. There is a lot of scope for different sectors to combine and also create value.
Hello everyone, I am Chitra Prakash and welcome to today's podcast. Today we have our Vice President Mr. Dev Aravind SR with us to discuss about what is inflation and wealth building in stock market. So hi sir, welcome.
Hello Chitra.
So as a VP of Strategic Alliance and Partnership, what potential do you see in the stock market?
So the Indian capital market is definitely going to grow and it's going to achieve a lot of milestones. There are three factors to it. One, with respect to the India's economic growth story. Two, the population where the demographics, especially the age group between 19 to 50, is really high. And this is also going to drive the Indian capital market. And the third and the most important point is there is increase in the investors' participation in the Indian capital market. So these three factors are definitely going to ensure that India's capital growth is going to be on the rise. And with respect to the synergy or the strategic alliances with the advent of digitization and other partnerships and also cross between different segments, there is a lot of scope for different sectors to combine and also create value. This way, there is huge potential when it comes to Indian stock market.
So what is inflation and how does stock market growth beats this inflation?
Inflation is nothing but how the rise in prices year on year decreases the purchasing power. With respect to the Indian stock market, for anyone to beat inflation, Indian stock market is a very good example where by investing in that, people can increase the value of their own wealth, thereby beating inflation invariably. For example, inflation lies anywhere between 4 to 6%, whereas the growth of Indian stock market over a 10-year period is in and around 30-35%. That way, for someone to beat inflation, the easiest way is to invest in the Indian capital market.
How does inflation influence stock market performance and investment returns?
See, with respect to inflation and the stock markets, generally companies look at 2 to 3 different factors. And especially when, let's say, the inflation is high, the influence on the interest rate is one of the biggest factors. The second one is, of course, the consumer spends. How the consumer starts to spend will get varied as inflation rates get varied. And the third point is the corporate profits. With respect to corporates, especially companies which have much fundamentally strong financials and also the pricing power versus how much they can add value, depending on these few factors, the companies that have a much more strong business will be able to deliver results as well as give profits. This way, despite there being a high inflation, there are these companies that give you a solid edge over inflation. However, there are few companies which may or may not have a sound financial. So those companies might get a hit when it comes to high inflation rates. And with low inflation rates, generally it's a positive for companies where people's purchasing power increases. There is much more activity. So when there is high inflation, stronger companies with fundamentals really strong survives, and during low inflation all the companies thrive. So for you to invest in the capital market, it will definitely act as a good hedge when it comes to inflation.
Do you believe that the stock market is the best way to build wealth for the future?
Yes, definitely. When it comes to the Indian capital markets, despite traditional saving methods, investing in the capital markets would definitely guarantee you good returns. And when I say good returns, it generally means that you will be able to get much more capital appreciation and dividends despite having these shorter volatility in the market. So, for example, if someone had invested about a lakh and if he is able to hold it for a period of 10 years, that 1 lakh amount would have definitely increased, beating the inflation as well as adding more wealth. So, for you to build wealth, investing in the Indian capital market is the easiest way.
So, what are the key principles of building wealth through stock market investment?
When it comes to investment in the stock market, there are three key principles that one must look at. One is diversification. How well you're building your portfolio and rebalancing your portfolio to ensure that the short term volatility and other risks are mitigated. Second, how well you are able to identify stocks. For this, you can use different tools to help analyze different companies, how they are valued, how their financial strength is, etc., to ensure good investment decisions. And the third one is how long are you able to stay invested. When it comes to stock markets, the longer you stay invested with the different stocks, you will be able to really get the advantage of power of compounding.
So, what impact does compounding have on long term investment growth?
When it comes to the compound growth, when a person stays invested for a longer period of time, the growth gets exponential as the time keeps moving on. For example, 1 lakh invested today, at the end of 10 years, with just 10% as return yearly, can go up to 2.4 lakhs. And this growth you can see as the time keeps increasing. So, for someone to stay invested, it really requires discipline as well as financial planning to ensure that they reap the maximum benefits out of compounding.
So, thank you so much, Dev sir, for sharing your valuable insights. So, please do like, share, and subscribe to our channel. Thank you for watching.